And check out the divergence between Berkshire and the S&P during that time. The S&P up 11%, Berkshire down about the same amount. But my next guest remains positive on the stock, just raised his price target and earnings estimates on the strength of the insurance businesses like Geico and Berkshire Hathaway Re. Joining us now is Brian Meredith, senior insurance analyst at UBS. Brian, welcome.
Thanks for having me, Kelly.
Does the underperformance catch you by surprise?
Not really, just because coming into the annual meeting, Berkshire stock was a little bit on the expensive side. So I think coupled with the fact that Buffett decided that he was going to become chairman, I think it maybe gave an excuse for some people maybe to pare down positions. That said, the company itself still has all those huge competitive edges that it still had when Buffett was CEO.
It surprised me to hear Bill Smead, who's been a longtime admirer of Buffett's, a longtime investor in the stock, at the top of the hour. He said he's exited his position. He just doesn't. He thinks there was a Buffett premium in the stock that shouldn't be there anymore.
Yeah, I don't think there was a Buffett premium in the stock, to be candid with Kelly. My analysis going back, looking at the valuations, there wasn't a Buffett premium. And the other thing that I think is incredibly important here for investors to understand is that the same, call it, strategic advantages that Berkshire had exist today with or without Buffett. That is the fact that you got permanent capital, an ironclad balance sheet, $350 billion of cash in the balance sheet, all sorts of huge advantages, as well as these great businesses.
From the sort of insurance or fundamental standpoint, then, that you're combing over, because a lot of people will go, come on, of course there's a Buffett premium. But what would you say the business is throwing off in terms of numbers to justify the valuation or the level that it's currently trading at?
Yeah, so what I would say, if we look at our price target, right, which is still get a reasonable amount of upside here, we do this sum of the parts analysis of it. And if you look at kind of where their non-insurance businesses are running right now, you put kind of a market multiple on them, you're going to get a good value for them, as well as if you look at the insurance businesses and you just look at what the generating, earnings out of those are, which candidly Geico and a couple of the other businesses are seeing some improvement here. You actually could start to see some upward estimate revisions, kind of like we increased our estimates. So I think there's a lot of good earnings power still here for Berkshire Hathaway. The other thing that is really important to understand here is Berkshire's call it this great company in an uncertain environment, macro environment. It's very defensive, but also a number of businesses that will actually do quite well in improving economy. So in my view, it's a really good business to hold on to here.